All good. That should be good to go. Hey, Mike, hey, Mike, can you tell me, is the YouTube actually working at the moment? All right, right there. Bev, how you doing? I'm doing fine, Bev. Thanks for asking. Nobody over on TikTok, on YouTube or Instagram yet. Okay, more likes can attract more viewers. Yeah, you got to keep hitting that like button. Some strange reason they like that kind of stuff. I will see. All right. All right, well, let's just jump on in, get started. No sense in slacking off. Gotta get the book. Admin. Do you want to invest in my AI startup? No, sorry about that. I only do what I understand, and I don't understand that. New book, new page. Did ALB today? Hey, Mike, how's it going? Well, let's take a look at ALB first on the list for today. ALB, Albemarle. Oh, I like that. All righty, so ALB. Apple. Okay, Mike, when I say I really don't look at the stock market during the day, I don't. KSS. All right, we'll look at ALB, Apple, and then Kohl's. Because I do have Kohl's still. No, I don't. I don't look at the stock market during the day. I do my 15, 20 minutes in the morning. That's it. And then I come sit here and do this, guys, with you guys. Hey, Doc. The missus is a little unhappy with you, Doc. What is your RRR? I have no idea what RRR means. Howdy, Al. Hey there, hi there, ho there. Us newbies get excited. Yeah. All right. Let's take a look at some ALB, Albemarle. I tried to leave a review on your website, but couldn't find place to comment. Oh, risk reward ratio. That's an interesting question. You know what? I don't even think about it, to be totally honest with you. I put all my money into the stock market every week. Samuel, how you doing? And I get a 1% return. So I'll put, okay, I'll get four or five positions. Okay, 4 or 5 positions, and I divide it up evenly. Hey, Mr. Bowman, what's happening? I'll divide it up evenly. So 5 accounts would be 20%, 20%, 20%. 4 accounts would be 25, 25, 25. Okay, and I look for that safe, secure, predictable, consistent 1% per week. Doc, I see you're at 96 followers. Don't forget to click subscribe and share. Hey, love to hike. Hello again. All righty. Well, first one we're looking at this evening is going to be Albemarle, ALB. Now, just to get started out, we got 272 people here. Woo, I like that number. Anyway, 272. So what we're looking to do here is safe, secure, predictable, consistent 1% per week. Please follow James so you can see the screen. Yeah, thanks, Al. Yeah, in order to get to the next level here, we wanted to use the TikTok Studio. In order to use the TikTok Studio, we need 10,000. This is not my rule. 10,000 followers. We're at 9,600 and change, but we should be getting there by the end of the month, which is Sunday, isn't it? Sunday? Hold on. So this is what happens when you don't work. When you don't work, you forget Monday. All right, Monday. I'd like to start off Monday, which is, ooh, there you go. Look at that. It's the calendar. We are here on the 27th. So we got 1, 2, 3, 4 days to get 300. That should be easy. So Monday starts the first week of the second quarter. Wow, I'm kind of excited to see what I end up for the week. I end up with the first quarter. Okay, I got one account that's up to 20% for the first. Can you imagine that? 20% for the first quarter alone in one account. The other one's just freaking ridiculous. Coach Jeff, UPS, AT&T, Verizon, Ford, Pfizer are my favorite dividend stocks. Well, I like Ford. Those other ones really not my favorites, but we'll take a look at them. Look, a couple of good ones. UPS, Ford, AT&T, Verizon, VZ, and Pfizer, Wow, I've been doing this too long. Let's see right off the top of my head. Alrighty, so that being said, let's jump on in and take a look at Albemarle. A-L-B, Albemarle. Okay, so Albemarle, A-L-B, they don't, A-L-B. Okay, no dividend this week. Wow, they had the dividend 3 weeks ago. 2 weeks ago? 3 weeks ago? Yeah, Daniel, we're going to be doing Kohl's in a little bit. Okay, just hang out, chill for a little bit. We're going to be Kohl's in a little bit. Okay, ALB, we'll take a look at it even though it's not on the list for consideration. Hey, fascinating football videos. How's it going? Good preems. Hey, fascinating football videos. Have you ever seen a running back as good as O.J. Simpson? I know he got a lot of shit about killing his wife, but the man could move. I mean, you watch some old video of him going through the lines. Wow. Okay, Mark. Okay, so do you put in and pull out all of your money every week, or do you put in so much every week? Interesting. Mark. Yes, all my money is invested every single week. That's kind of like, waking up and not going to work. Okay, how often do you do that? You don't go to work, you don't get paid. So I get a return every week. Trump's not going to make next meme GameStop. Probably. Sam Price, how's it going? Mike. Bo Jackson, Barry Sanders. Okay. What option should I buy tomorrow? Hey, Vibes, I don't give advice on such that. It has been a great day in the market. Well, we're going to take a look at that and see what everything looks like. Okay, ALB, let's take a quick look at it because some people have it from a couple of weeks ago because they had their dividend a couple of weeks ago. All right, get everything situated here. Best dividend stocks. That's what we're taking a look at. I'm a stock expert. Ask me anything. Thunderfart. I think you might want to change that name if you're going to go that route. Is there a minimum amount of money to get started in this trading strategy? No, not really. You can start out with anything. My grandson started out with $50. Granted, he doesn't make the returns that I do, but you take what you got. I'm 60, he's 4. I bought some ALB again this week. Premium was good. All right, let's take a look at ALB right now. Albemarle. The last trade today was 120 right here, 128.80. That was the last trade today. Okay, for those of you who don't know, this here is Thinkorswim, which is owned by Charles Schwab. What advice would you give your grandson? Absolutely nothing. He's 4 years old. He doesn't understand anything. So I'm waiting for him to get to the age of comprehension. It was 118 2 days ago. Cool. What about SPY, which is spiders? Yeah, no, I don't do that. Okay, dividend stocks only. No ETFs, no indexes. I buy Walgreens every week. Hey, I got a bunch of Walgreens. Amazon and Microsoft, that's all anyone needs. Thank me in 5 years. Yeah, well, I'm going to say no. But we'll take a look at Amazon and Microsoft. I have a stock screener built in on my Blueberm term. Okay. What about Coca-Cola? Coca-Cola's on the list. However, the premiums are terrible. MSFT. Okay. And what is Amazon? AMZN? AMZN. Why do I know all this crap? Shit. All right. What's your biggest holding out longest in dividends? Yeah, I got that. AMZ and MSFT. The longest I've ever held on to anything was 9 months, and that was Bristol. No, it wasn't. Wasn't Bristol Myers Squibb. Hold on a second, because last year I had 3 of them that were kind of CATX. That's a no. CATX. Okay, so I have a couple of criteria. Number 1, they got to have at least 20 years of increased dividends, and they got to have weekly options. Hey, mamas, KC, ADM. ADM's a no, that's a monthly. VOO is the only thing you should be holding on to for 9 months. Okay, Ronster, let me ask you a question. Is VOO paying you 30% a year? Kind of question. Chief 11. Yeah, I'm tired. I held on to Target for no. I held on to Target for only I think 6 months. It was there was another one I held on to for 9 months. FTS. Tesla. Paul, I'm going to say no. Tesla doesn't pay dividends, so why would I do that? What dividend pays 30 cents? 30%. Okay, you're new here. So if you ask that question, you're new here and you don't know what exactly we do. AMD. CSCO. Yes, I do place CSCO. That's Costco. See, no, wait a minute. That's Cisco. CSCO. AMD is a monthly, and I don't do monthlies. Okay, monthlies just don't pay the bills. Probably something going bankrupt. Well, Thunderfart, thank you for that. JXN. Okay, interesting. Alrighty. Okay, so out of this list so far, 1, 2, 3, 4, 5, 6, 7, 8, 9. Only 9 of them are on my list. Just hope you're not selling life insurance. Well, now that you mention that, yes, Verizon is on the list. Let's take a look at Albemarle. We'll get to the questions later. All right. Albemarle, ALB, right? The last trade was 28.80. The bid 28.51. The ask 29.50. I'm new here. What should I know? Thank you. All right, Guinness guy, just chill, watch, see if it makes sense first. Okay, the list again. Here's the list. See, not that big at the moment. Vale, VALE, 17% gain. VALE. All right, so let's me just get 325 people. Let me quickly break this down because you guys are throwing a bunch of garbage at me. Okay, sorry to insult anyone. However, okay, now this strategy was created for my 9-year-old daughter back in 2008. When she sat on my lap, say, "Daddy, can you teach me what you're doing?" Okay, so I had a very interesting conversation with a 9-year-old. So here was what we had to come up with. Here's the obstacles. Okay, the obstacles for trying to teach a 9-year-old how to trade in the stock market. All right, it had to be simple. Okay, had to be simple. It had to be safe. It had to be predictable, and it had to be consistent. And 5, no way she could possibly lose. So that being said, that 5 pieces of criteria: simple, safe, predictable, consistent, no way she can lose. So now the 5 rules came along with that. 5 rules were: rule number 1, never buy anything you do not plan on holding for the long term. Okay? Rule number 2, never sell at a loss. Rule number 3, make sure the company you invest in has 20 years or more of increased dividend payments to their shareholders. When you buy stock, when you invest, you become a shareholder. You own a part of the company. You are entitled to a portion of the profits. That is a dividend. Yes, the aristocrats, 25 years of increased dividends or more. Rule number 4, make sure the charts all look good and it has weekly options available. Wait a minute. Never buy something you don't want to hold long term. Never settle a loss. Make sure the charts look good. Weekly options, 20 years of increased dividends. Yeah, I think that's about it. Okay. That being said, out of the 9,500 different companies in the stock market that you can choose on a daily basis, 9,500. We actually go right here. Okay, now for those of you who don't know, this screen here is being live broadcast on YouTube. To find that, you have the link right here in the description. In the description below. Okay, so go to the description and it'll tell you how to get to the screen. So you can actually see everything on my screen. Okay, where I'm going right now is called FinViz, financialvisualizations.com. They have a screener which screens every single stock in the stock market. All right, first thing you want to see, this number over here, 9,491. That means there's 9,491 companies you can invest in the stock market. Okay, now, half of them pay out dividends, means they share their profits. The other half do not share their dividends, do not share the profits. Okay, so do I want a company for capital appreciation who invest their profits back into the company for growth? Okay, there's nothing wrong with that. Or do I want a company that pays the dividends and shares the profits with me? Do you use bots to find signals? No, I don't. Okay, so if I go here, FinViz, Financial Visualizations, it's a stock screener. It shows you all the stocks in the stock market. This tab right here, it tells you the dividend. So once I click on that, it isolates every single company that pays out a dividend. Okay, now there's only 4,325. Okay, that actually pay a dividend. So 4,325 companies pay a dividend. So I go over here and I check off this tab over here. What kind of options? Okay, optionable. Okay, now I'm down to 2,671. Okay, I want to take notes, but I'm driving home. I do options, cool beans. All right, so 2,671. So out of those 2,671, only 150 meet my criteria. That's it, only 150. I have 150 stocks on my list. Okay, what I do is I take those and I put those into the stock calendar. Oops, wrong one. The calendar. It tells me when each one is paying out a dividend. Okay, there's 12 months in a year, 266 trading days in a year, 4 quarters. Okay, January, February, March, quarter 1, April, May, June, quarter 2, July, August, September, 3, October, November, December, 4 quarters. In those 4 quarters, there are 13 weeks. Okay, within those 13 weeks, all right, within those 13 weeks, there's only 66 trading days. So I have 150 companies to look at within a 66 trading day period. That means every week I have between 5 and 20 stocks to pick. Now I only pick 5, okay, because it's 20%, 20%, 20%, 20%, 20%. Okay, my portfolio 20% into each income, into each investment. I collect 1%, safe, secure, predictable, consistent. Bro, you have no idea how much I does this. Okay, that's good, I think. I don't know. Anyway, so every week I have a different set of companies to choose from. Now let me give you a rough idea. Let's take a look at Warren Buffett's list. Okay, Warren Buffett's list right here. The month of March. Bank of America, General Motors, T-Mobile, KHC, Heinz Ketchup, Occidental Petroleum, Hewlett Packard, Boyd, what was it? Boyd, what did they count? Boyd something. Boyd Gaming, yeah. Boyd Gaming, Coca-Cola, Paramount, Mendelez, USB, American Express, Bristol Myers Squibb, Globe Life. You probably heard of almost every single one of those companies. Okay, that's just Warren Buffett's list. Okay, now I got the Dividend Kings list, the Dividend Aristocrats, the Dividend Champions, stock companies that are over 100 years old and continuously pay dividends. A whole bunch. On YouTube, use the 10-minute trader. Thanks for that, Al. Yeah, on YouTube, it's a 10-minute trader. You can go right up here to the link, right here in the bio. The bio will take you to the website, which is right here. The website, the10minutetrader.com. Okay, on the 10minutetrader.com, you slide down. Here's all the social media: YouTube, Twitter, Facebook, Instagram, podcast. My podcast, LinkedIn, Patreon, TikTok, all the books I've written, and live YouTube. Okay, we're live on YouTube right now. So what you're saying is you buy before the dividend payment and sell after to get your dividend. Close, but no. Sit tight and everything will be revealed to you. Ooh, what is that saying? Ask and you shall receive. Behold, and everything will be revealed in time. Something like that. All right. It shows the same thing, but doesn't show the screen on YouTube. Okay. What your best paying dividend? I own IVR at 40 payout bought at 8.42. IVR is not on my list because they don't have 20 years of increased dividends. But I'll take a look at it. IVR. Now, I make sure they have 20 years of increased dividends. Why? Why do I possibly want a company that pays 20 years of increased dividends? Can you show one more time how to search for the stocks that you pay you? But RDVI, yeah, no. Explain why a company would withhold a partial amount of the dividend payment. YouTube, he's live on 2 screens. That's right. YouTube is working. Hi, okay. You have to pick the correct one to see the screen. That's correct too. In case you have to hold the stock for some time. Yes, Jose, you got it. The reason why I buy companies that have 20 years of increased dividends was, what happens if it goes down and you don't want to sell the premium and lose money? Well, the dividends get increased year after year after year. Hey, Randall Ray, you're back again. Way to go. Okay, if the stock goes down, the absolute worst case scenario is you're getting a higher and higher dividend every single year. That's why I want nothing but companies that have increased their dividends for 20 years or more. And what are those? The dividend kings, dividend aristocrats, dividend champions. I look at Warren Buffett's. Now, Warren Buffett's list doesn't have companies that have all 20 years of increased dividends. I mean, Apple doesn't have 20 years of increased dividends, but I buy it anyway because it's on Warren Buffett's list. Okay? You have to buy more to increase your yield if it goes down. Well, that's called dollar cost averaging. And you could do that if you want, but you got to remember rule number 1. Don't buy something unless you plan on holding it for a long period of time. Which dividend stocks would you buy today to start with? Well, Val, we're going to take a look at some right now. Okay, we're going to take a look at some, and you tell me if it makes sense to you. Where do you find Warren Buffett's dividend list? Ooh, excuse me. Google Warren Buffett's stock list. It's really not that difficult. You open it up, go to Google, hit enter, and Warren Buffett's stock portfolio. Right there. Second one. Warren Buffett stock portfolio 2024. 45, all 45 of Warren Buffett stock in 2024. Okay? Look, all 45 Warren Buffett's portfolio stocks. Now, current list 2024. BP, British Petroleum. Ooh, you're the first person to pick that one. Okay? And then 80 some odd days I've been doing this, nobody's ever mentioned British Petroleum. All right, so let's get out of here. Oh, before I go on any further, I just want to let you guys know there's 200 people here. VNO, that's a big no. Okay? So what do you think about KMI? Kinder Morgan. Ooh, not bad. KMI. Kinder Morgan is on the list. It's on my list. Okay, anyway. So before I go any further, I got to let you guys know there are officially that I know of 8 people pretending to be me on this platform. Okay? So if you get an email, a text, a DM, or whatever, some kind of communication from someone pretending to be me asking you for money, you will hear me say this live every night. If you want to talk to me, DM me with your phone number and I will call you. If you don't answer, that's nothing I can do about that. But I do call. BRK-B. Eric, I've never heard of them. Okay, now, Eric, are you 100% sure they have 20 years of increased dividends and have weekly options available? Let's get back to ALB so we can actually progress forward. All right. LYB, Mr. Kane, how much do you need to invest in order to get a decent dividend? Okay, it all depends on what you consider decent. Berkshire Hathaway Class B. Okay. Albemarle, let's just get started. Albemarle last year, a year ago today. Okay, we already looked at AT&T. The premiums are terrible. $219, okay? A year ago, $219. The high for the year was $248.04, okay? That was in the middle of July. Okay, now the last 90 days. Last 90 days will be the 26th, 27th. All right, the 27th. The 27th, 90 days ago today. Look at the big drop. 90 days ago, she drops. Right? A little bit of pullback, drops again, and escalates, comes down to the yearly bottom. The yearly bottom is right here. We should probably have a secret code word if it's you, frizzle frazzle. Okay. People usually say squirrel because I get distracted every once in a while. BRK doesn't pay dividends. Thank you for that. What stocks are you talking about? Well, right now we're talking about ALB, Albemarle. Albemarle is a dividend king, which means they have paid a dividend and increased their dividends consecutively for 5 decades. Is that a good pick? Your suggestion? I don't suggest anything. Okay, I just show you the numbers. 60,000. How would you invest it? Any good advice? Hey, Rich Raider in Philly. Rich Raider in Philly. LYB is a monthly, so LYB is a no. Rich Raider in Philly. I don't tell people what to do. Okay, but all I know is 60,000 would probably get you 1% a week, which would be $600 a week. Okay, that's 1% a week. Safe, secure, predictable, and consistent. Okay, just sit back, watch, see how the strategy goes, and see if it makes sense. Good answer. Don't recommend specific stocks. Well, I don't want to be responsible for people not doing their own due diligence. Okay, I just read the numbers. If the numbers work out, I tell you, it looks good. I would do it myself. That's all I say. I do not tell anyone what to buy. Okay, you're all adults here. Okay, you're all responsible for your own money and your own choices. Okay. Also, liability. Yes, that's the good one. Have fun trying to collect something from me. I am what you call a hopeless case in litigation. Okay, I'm what you call uncollectible. And I only that way because of my past. I have learned to put things not in my name. Okay, are you licensed? Yes, I do have a license. AIB, would you go in right now? I have no idea who AIB is. Okay, what do you factor at trading fees? You always have to factor it in. So what are you saying is every 100 you invest, you get $1 back a dividend? That's not what I said at all. Oh, wait a minute. Yeah, that is about 1%. Okay, so 1% per week. That comes to around 50% per year. ALB, well, we're going to take a look at that numbers right now. Okay, so let's sit tight on all the questions. Okay, Alex, all these questions are going so fast, I can't read them all. Okay, and I still haven't gotten to ALB. And it's been 30 minutes. I haven't gotten to ALB yet. Yeah, 1% per week. So 1% per week comes out to right around 50% per year. Well, let's get to the Albemarle. Okay, so 90 days ago, we had a high of 153.21. She drops pretty quick. Then you have your pullback. Okay, she drops, pullback, drops again, escalates, drops, back up. Now we're going sideways for the past couple of weeks. So let's take a good look at that. Last 30 days. All right. Last 30 days ago, we were at 127.44, the 30-day high right here. Okay. Now, you'll hear me say a few things over and over again. See, let me go back a little bit so I can show this to you a little easier. All right. You see this bottom down here? 108. 108. Then she escalates up to hit 142.5, 143. Okay. If you don't take your profit, look at this. That's all profit right there. If you don't take it, look what happens. The market maker takes it away from you. He brings it down, and then he gaps down and brings it down again. Okay? Oh, look, we have someone over here at Instagram. Hey, how you guys over doing at Instagram? All right, so if you don't take a profit, the market maker will take it away from you. All right, so let's go back to the last 30 days. 30 days, tra-la-la. Okay, there we go. Okay, 30 days ago, right here. The high for the 30 days. 2 days later, you got the low for the 30 days. So if you don't take your profit while it's here, while it's waiting to be taken, the market maker is going to take it away from you. Okay? So then from there, she goes up a little bit, and then just goes sideways for the last couple of weeks. Okay? All right. Alex, I'm sorry, man. These they go so fast, I can't see each and every question. I do trailing stop losses. Good for you. I don't do that. Okay? Remember what I said. This had to be simple. This strategy was created for a 9-year-old girl, 9 years old. Trailing stops, naked puts, what do you call them? Cash secured puts. If it was complicated, she wouldn't understand it. How do you take your profits? We're going to get there in a second. What is the market maker? Oh my goodness. All right, I'll give you that for instance. Let's say you go into a grocery store. Okay, the owner of the grocery store, he's the market maker. He will buy a gallon of milk for $3 and he will sell you a gallon of milk for $4. What he makes is the difference between what he pays for it and what he sells it for. The market maker is the person right here. The last trade was 128. Let me open this up a little bit more. Okay. The last trade, that's when you and I, the investors, stop buying and selling. Compound interest. If you don't take your profits, it's about 68% a year. It's about 67 something, whatever, and change. HRL. Let's take a look at that one. HRL. All right. Trailing stop losses is essential for taking profits. Okay. Vampire bats. Oh, cool. That's your strategy. That's not my strategy. Okay, my strategy doesn't do that at all. Sit tight. You'll see it in a minute. DRIP, reinvest in dividends. It's called DRIP. Yes, I'm aware of that also. Can you explain what a buy side, sell side liquidity? Wow. Now, I've been doing this for 20 years. I like things simple. Vampire. Nice to meet you. Okay, cool. BTU. BTU. I'll write that down. What's the most I need to invest in dividends? 3M. Squirrel. Yeah, Mike, I saw that. How do we make money? All right, Spike, just chill, relax. 3M. All right. All right, that's it. I'm stopping all the questions. All right, how do we do this again? Right here. All right. No more questions. And Coach Jeff, definitely no. I don't do monthlies. Is a monthly optionable stock. Hopefully we'll get to a monthly and I'll be able to show you why I don't do monthlies, because the numbers just don't work. Hey, Mike, you're sneaking in over here on YouTube. So I got TikTok here, YouTube there, and Instagram over here. I used to have Facebook, but I'm having an issue with the phone. Now, we're still talking about Albemarle. All right? I like to look at the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality chart. So for those of you who don't know what a seasonality chart is, it is right here. Okay, this is the seasonality chart. The blue represents the motion or the movement this year. The red is 10 years worth of data. 2014, 2015, 2016, 2017, so on and so forth. 10 years average movement. So where is it going to do in the next couple of weeks? That's what we want to take. We want to take and isolate that area right here and see what it does. For that, I take my mouse, put it there, click, drag to the right, and basically the next couple of weeks should go sideways for a bit for the first week of April. Second week of April, she should dip a little bit and then recover. But I'm only interested in the next 5 days, okay, Monday through Friday, because I like to buy on a Monday and I like to be out on a Friday and collect that nice fat premium if it has one. So let's take a look. Back to the regular chart. Bring this back over. Now, look at the last couple of weeks. Okay, after the 30-day bottom at 106.53, right here, she comes up a little bit and then comes sideways. Today was a big up day. So what do you think is going to happen tomorrow? Look at the size of the update today. Okay, she opened up at 119. Whoops, the wrong one. Okay. She opened up at 119 and went to 129. That's a $10 move. What do you think is going to happen tomorrow? The week ends tomorrow. Okay, I think personally there's going to be profit taken tomorrow because that was a big jump and it went over the past 3 weeks. Now this gap is going to fill eventually. It could fill tomorrow. It could fill next week. It could take a couple of weeks. I don't know. I like to jump in, grab my profits, and get away. So what do the numbers look like? Now, we don't want to look at that one. We want to look at next week's. All right, so the last trade was 128.80. Now, this is the trade grid. Okay, you got the last traded price, the bid, and the ask. Now, for those who wanted to know who the market maker was, think of the guy at the grocery store who owns the grocery store. He buys a gallon of milk for $3, sells it to you for $4. His profit is the difference between what he buys it for and what he sells it for. This number right here, the bid and the ask, this is what the market maker buys it for, okay, what you and I sell it to him for, and this is what the market maker sells it for, what you and I buy it for. Okay, so he makes the difference between the bid and the ask. Just think of the gallon of milk. Guy at the grocery store will buy it for $3, and he will sell it to us, the buyers, at $4. Okay, his profit is the difference between what he pays for it and what he sells it for. Okay, this is what he pays for it. This is what he sells it for. That's the market maker. That's his job. That's what his business is. He buys stocks. He sells stocks. Okay, so if I want to buy it first thing tomorrow morning, I am paying $29.50. Okay, if I want to sell it tomorrow, I am selling it for $28.51. The difference between the two is called the spread, and that's the market maker's profits, because you got to have someone to sell it to. All right, so that being said, if I buy it tomorrow morning at $29.50, okay, you have the volume, the open, the high, and the low. All the numbers right there. Okay, the last traded price, that's the close of the day. Okay, the bid, the ask, volume, open, high, low. That's all the numbers. Down below that is called the option chain. Now, if you're not approved for trading options, that's what you're going to see, because you have to be approved to trade options. Now, this option strategy that I'm teaching you is the simplest, easiest trading strategy there is, and it's the safest. It's called a covered call, which means you buy the stock and you sell somebody a call option, which is the right for someone to buy it from you at a certain price by a certain day. Okay, so I buy my stocks on Monday, and I sell someone the rights to buy it from me by the following Friday. Okay, so this one right here says 28 March 24. That's tomorrow. Those options expire tomorrow. Those ones are basically worthless at this moment in time. So we're looking at next week, which is 5 April 24. That's next Friday. Okay, so when I do a weekly option, I mean I want to buy it on Monday morning, sell the option Monday morning. That's where I get the highest value for my dollar. Now, you want to know where I get the 1% per week? That's where fancy math comes in. Right now, $29.50, the closest strike price is the 130, right? And the 130 at this moment in time is selling for $2.97. So let's get the calculator out. Okay, clear that. $2.97. And the purchase price was, I divide it by the purchase price, $129.50, and that comes to a grand total of 2.29%. That's 2.3%. So if I buy it tomorrow morning, at $29.50, I sell somebody the right, not the obligation. That means if it goes above 130, they can buy it if they want. They don't have to if they don't want to. Okay, the right but not the obligation. It's called a call option or a covered call. Buy right, whatever. They have a lot of different names for it, but basically you're a covered call. It's the safest trading strategy there is. Now, this one in particular is offering 2.3% for 1 week. Okay, so if I took 20% of my portfolio and then I ask myself, do I like Albemarle? Do I mind holding Albemarle for a long period of time? Well, number one, it's on my list. So yes, apparently I do. I wouldn't mind buying it at all. As a matter of fact, I'm going to write it down and circle it for consideration for Monday. ALB. And it is circled. Okay? ALB. It's circled for Monday. Because all my money's tied up already. Okay? I do all my trading on Mondays because when I sell the option for Friday that expires on Friday, the highest rate of return for my invested dollar is Monday morning. Okay, so Monday morning, I would buy that at 129.50, sell some on the right to 130, collect 2.3%. Now here's even better. Okay, what's even better than that? If by Friday afternoon the stock does go over 130, whoever bought that option, is that the third ever you've added to the list? No, Albemarle's been on my list for a long time. No, nice one though, Galance. That's a good one, but no. All right, so what was I saying? Squirrel. I have ADD. I get distracted easily. As I was saying, if I buy it tomorrow morning at 129, or if I buy it Monday at 129.50, and I sell the 130 call strike, see, you got to get the word terminology correct. Buy option, sell option, open trade, close trade. When you do it, you really got to get the terminology correct, because you could lose a lot of money if you don't get the terminology correct. All right, so if I buy it at 129.50, the stock, if I buy the stock for 129.50, all right, and then I sell the call option for someone to buy it from me for 130, and the stock stays above 130 by Friday, I will already collected that 2.3% as the premium, okay, and I would collect an additional 50 cents, which is the difference between the purchase price, 129.50, and the strike price, 130. It's an additional 50 cents. Okay, so I'm already collecting $2.97 for the 130. Okay, so if you guys are looking at this on your computer, okay, the 130 strike price, okay, if I can sell it for $2.97. Okay, so $2.97 is 2.29% of the purchase price. So if you wanted to know how do I get 1% per week, well, I do a lot of trades like this. I'll go through my list. Okay. Now I have a bunch of lists. Okay, I'll go through my list for the week. Okay, what week am I looking at? Well, I'm looking at the first week of April. What stocks are contenders or are up for me to take a look at the first week of April? Then from there, I figure out which one works. Very first thing I want to do, take a look at the 1-year chart. Take a look at the 90-day chart. Take a look at the 30-day chart. And then the seasonality. If all 4 of those charts look good, because I don't want to fight the trend. If the stock is moving up and it's up too high and there's too much profit to be taken, profit's going to be taken. Okay? If you see it move up, like over here, okay, 30 days ago, okay, 1, 2, 3, 4, 4 days to the upside, from 127 to 142. If you don't take your profit, see these big fat red lines? The market maker is going to drop the price, and he's going to take that option, that profit right away from you. All right. Okay, then she moves up. This trade line goes sideways. So Albemarle does look good. It does. I'm not saying it's a suggestion to buy it. I'm just saying it's on my list for consideration for Monday. All right. Next on the list is Apple. All right. Now I turned off all the questions. All right, only because I got a nice fat list to go through, okay, before I start taking more questions. All right. Next one on the list is Apple, APL. Now, just to let you know, I do own some Apple. All right, so I'm supposed to let you know what I own and whatnot. All right, so a year ago today, Apple was at the bottom of the year, and that was 156.07. Okay, we shoot on up, a nice profit. Look at that. If you don't take that profit, look at all the red. Market maker is going to push it down and take that profit away from you. Okay, so a year ago today, 156.54. The high of the year was 199.43, and that was the middle of December. Now, the last 90 days, which was December 27th, She opened up. Compatibility error has happened. You know what that means? That means we open up the questions again because we're getting kicked off. What a bummer. Okay. When that thing right there pops up, that means they're doing, what do you call it? Maintenance. When they do maintenance, 1% per stock or total from all stocks. All right, Randall, I do about 4 or 5 positions every week. All right, do you modify your strategy during bear markets? Basically, no. How about Tesla now? Tesla does not pay dividends. I don't know how many times I'm going to say that. ALB EX date was 3/14. Yeah, exactly. But someone suggested me take a look at it. I didn't say it was up for consideration for this week. No, he makes a list every night, and then when it sees up, yep. Should I buy Palatamare? Yes or no? I have no idea. I have no idea who they are. All right, when you're doing this, the 1 year and the 90-day and the 30-day, what exactly are you looking for? Oh, high, low. What was it? Where is it now? Okay, where's the high of the last 30 days? What's the low of the last 30 days? Where was it 30 days ago? Where is it now? Once I see that, I want to see the movement. Okay, she's coming off of a high, get profit taken here. She shoots on up, profit taken here. Shoots on up again, profit taken here, and then she stair steps way down, more profit taken here. Okay, now if you expand it, I don't know if I can do that. If I expand it, I don't think I can. Oh yeah, I can. Look at that. Okay, if I expand it, look, the low of the year is way down here. What percentage of your stocks are called away? So is the dividend. Okay. Will Feds cut rates soon? I have no idea about that question. I don't really pay attention to that. Okay, so when I say profit taken, I'm going from the bottom of the year. The bottom of the year is here. Up, profit taken, up, profit taken, up, profit taken, up, profit taken, up, profit taken. Okay, stocks only move 2 ways. They move up, they move down. They do not come to your house and wash the dishes. They will not wash your car. They will not babysit your children. They go up, they go down. That's all they do. Caterpillar is high, but it's still a great buy. Caterpillar is on my list. Now, I will look at Caterpillar 4 times in a year. That's it, just before the EX date. If the numbers look good and the trends are right, I'll buy it. If not, I'll go on to the next stock. So you're looking for profit taking? No, that's not what I'm looking for at all. I'm looking for predictable movement. Now, if you go back into this, okay, if you go back into this, right, how often do you roll? Okay, it goes up to a point, and then there's profit taking. Okay, she gaps down there, she gaps down here. Gaps have a tendency to fill. Okay, so what happened? Look, that gap got filled, this gap got filled. There was more profit taking. And then we have a bottom right over here. I like to say 2 days to the upside before I jump in. Hey, the Clips Index, how's it going? LAC, David, I never heard of LAC. Now, you may be asking, why have I never heard of LAC? Well, I never heard of a lot of these companies you guys are throwing at me. Reason being is because every time you guys mention something to me, I take a look at it. And 9 times out of 10, they don't meet the criteria. What's the criteria? 20 years of increased dividends. SPR does not have 20 years of increased dividends. Neither does JAGX. 20 years of increased dividends and weekly options. Okay? Okay, JAGX. JAGX. Okay, waiting for data. Sorry. KView, SWN. No. You make 1% on all 4 per week, 1% between them. Okay, Randall rate, yeah, not always. Okay, if you saw, all right, this is my website, The 10-Minute Trader. And if you scroll over here, you'll see all my trades for the year. Week 1, week 2, week 3, week 4, week 5, week 6, so on and so forth. So, here we go. Week number 1, you look at these numbers yourself, 2.1%. Week number 2, 1.3. Week number 3, 0.85. I didn't hit 1% on week number 3. Week number 4, 0.9. I didn't hit 1% in week number 4. Week 5, 1%. Week 6, 1%. Week 7, 1.9%. Week 8, 2%. Week 9, 2.3%. I said I average 1% per week. Okay, my goal, safe, secure, predictable, consistent, 1% per week. That's my goal. That's my aim. That's my focus. Do I make it every week? No, I don't. I made 2.3% week number 9. Week number 10, 4.6%. TSLY is a big fat no. All right, week 11, 3.9. And week number 12, which was last week, I got 0.9% again. Because that's 3 weeks I didn't hit 1%. 3 weeks I didn't hit 1% so far this year. However, my return so far this week is at 21%. Okay, there's 13 weeks in a quarter. We're in week number 13. Okay, safe, secure, predictable, consistent, 1% per week. I'm at 21% for the first quarter. That's well over 1%. Why don't all brokers suggest this? Yeah, right. Really interested in HRL. We'll get to it. HSBC, that is an ETF. That is a big fat no. So some of you guys just don't pay attention. Okay? When I say dividend stock only, 20 years of increased dividends and weekly options. HSBC is a big fat no. Okay, that account's not opening up. That account's not opening up. Okay, so Thinkorswim is doing, what do you call it? Maintenance. They do that once in a while. So I'm kind of bumming, so we're just going to answer questions for a while. Okay, what other questions do we have? Okay, HSBC is an ETF. That's a no. Quantitative computing stocks. I have no idea. What's your delta on selling options? Okay, in Clip Index, you're not paying attention at all. It had to be simple. Once you get into that, it's no longer simple. Why don't all brokers suggest this? You laughed. Yeah, I did. Why would brokers suggest this? A lot of them don't know it. Do you have to buy 100 shares? Yeah. In order to do one contract, you have to have 100 shares. 2 contracts, 200 shares. All right. Pepsi, Coca-Cola, J&J. Yeah, David. All of those are on my list. Pepsi, Coke, great companies. Johnson & Johnson, great company. Procter & Gamble, great company. Each one of those companies is over 100 years old. Why wouldn't they be on the list? Okay, QYLD, that's an ETF. That's a big fat no. Verizon is on my list. Draft, what's happening? How can you get your list? Well, to get the list, you have to actually join up on my... All right, every morning we have a trading club. I don't know what we want to call it yet. Where we get together and we do trades every morning. Monday, Tuesday, Wednesday, Thursday. Okay, we jump on at 9:15 and we finish up somewhere around 10. We go through all the trades that are on my list. Okay, after I do my podcast, I answer all the questions and take a look at what's on the list and see if you can do the trades too. Let me go back a little bit. Okay, what do you think about QYLD? All right, Build to Pay. QYLD is an ETF. All right, an ETF, electronically traded funds, is just for people who don't want to do it themselves. And there's nothing wrong with that. Okay, you don't want to do it yourself, give it to someone else. But I can pretty much guarantee QYLD does not give you over 30% per year. Okay, I look for a safe, secure, predictable, consistent 1% per week. 1% per week, there's 52 weeks in a year, that's over 50% per year. Okay, now I showed you what my trades are. Okay, these are all my trades. 2 accounts, 1 account here, 1 account there. 2 different numbers. Okay, account number 1 is up 21.6%. Account number 2 is up 42%. Okay, one's a cash, one's margin. Difference between the two. All my trades are right there. Okay, 2.3%, 2%, 1%, 1%, 1%, 0.9. I missed it 3 weeks. Okay, 0.9, 0.85. I can live. It's still over $1,000 a week. All right, that's at the 10minutetrader.com. All right, QYLD is definite no. So you go for the most premium near the money. That's exactly right. But I want to make sure the stock is in the right position. That's why I look at the 1-year chart, the 90-day chart, the 30-day chart, and the seasonality. Now, seasonality just gives me an idea how the stock reacts on a year-to-year basis during this time frame. Okay, the 1-year chart shows me what the high is of the year and what the low is for the year. Because I don't want to be at the high, because profit taking is right around the corner. I don't want to be at the bottom on a sinking ship. I want it to be at the bottom as it turns, goes back the other direction. I just want to have an idea where it is. Same thing with the 90 days. Same thing. What's the high? What's the low? What's the direction? The 30 days is the most important to me because I want to see where where the stock is trending. What's happening? All right. Do the options just expire at the end of the week, or do you have to do something to end it? Well, that is an interesting question because in Thinkorswim, you can let the options expire. However, some trading accounts, you cannot let them expire. For instance, Robinhood will not let options expire. You have to buy them back. That's why we jump on at 3:30 on a Friday or day of expiration. Tomorrow is Thursday, day of expiration, because there's no trading on Friday. So we're going to jump online, a private little trading group. If you guys want to be part of the trading group, go to the Patreon, sign up. That's where you get the list. That's where you get all the information. That's where you get to talk to me one-on-one. Okay, that we jump in just before the market close. So if there's any positions we need to take a look at, ask a question. Okay, what happens here? What's this going to happen here? Oh, wow, take a look at that. In this account, everything's in the money except for USB and NYCB. Okay, so 2 out of 7. Cool. All right. Let's go up a little bit more. I'm not quite getting it, but I'll be back. All right. When is the best day to do covered calls? That's Monday. Who is your broker? That is Thinkorswim, which is owned by Charles Schwab. He will only consider companies with consistent increased dividends. Thank you, Jose. Jose, I tried to call you twice today, dude. Is there a specific formula you're using to determine the premium? It's not my formula at all. It is basically what is the profit. Okay, PTM, that's a no. What was I saying? Oh, the formula. Basically, your profit. The profit is the premium. Okay, you sell the premium, you collect the premium. You get that premium and you divide it by what you paid for it. So what you paid for something and what you sell it for, that's your profit. And to figure out what your profit is, you divide the purchase price into the profit, and that gives you a percentage. Thoughts on small cap? All right, Connor, you're not really paying attention. I don't put stocks in I don't put them in categories. They either pay 20 years of increased dividends or they don't. They have weekly options or they don't. Just stumbled onto your live. What's the general strategy selling covered calls? The person, that's exactly what it is. But we only do covered calls on pre-qualified dividend stocks. Those are companies with 20 years or more of increased dividends and have weekly options available. You look at the premium but have to subtract if you're selling a call below strike price. That's correct. I use the Iron Butterfly and the Condor spreads vertically. I use those too, but not on this strategy, not on this platform, not in this account. You buy on every Monday? Yes, I do. Can I do this method with only a few thousand to start? No, I need a big. No, you can start with a couple $100. There's a whole bunch of different strategies that will take advantage of this type of strategy. This, I call it the dividend capturing 2.0. DJT stock worth it? I couldn't tell you that one. Bullish on SPY tomorrow? I couldn't tell you that one either. What's your thoughts on question mark GSIT? I have no idea who that even is. This guy has great patience. Yeah, for some of you people, I do. Some of you people have great patience. All right, I'm going to close out of this and see if I can jump back in again, because apparently Thinkorswim is doing some maintenance. Yes, I know what DJT is. Okay, and I would look at it. I would buy it just for the sake of, I can't stand what the federal government is actually doing to the man. Never in whole history of the United States, actually the world, has anyone been prosecuted as much as him. All right, I don't do politics here, so please don't do that. I agree with you, but don't do that. I don't want to be considered as one of those. I bought a boatload of Apple stock. What covered call price should I invest in the next Apple, April 5th? Well, Lily Vidarth. Okay, Lily Vidarth, I can't answer that question for you. If you really want my opinion, DM me with your phone number. We'll have a nice chat. Just purchase undervalued dividend aristocrats and hold. Okay, Joshua, I'm going to disagree with you there. Struggling with understanding, calculating the premiums with covered calls. All right, come on, Gallant, you've been here long enough. You should know. You take the premium that you collect and you divide it by the purchase price. Okay, it's that simple. The premium you collect divided by the purchase price. That will give you your return for the week. Let's see if we can sign back up again. I really want to connect with you to join your trading group. Jose, DM me again, because once I hit that button to accept, it erases everything. So I don't have your phone number anymore. It's there on my phone. Okay, once I dial your phone number disappears. Okay, so DM me again with your number and see, we'll try it again tomorrow. Most likely I call in the mornings. All right, struggling with understanding cat. All right, the lines. Smarty pants. All right. Oh, what? Oh, what reason do you close the contract early? Well, what other reason is there? All about the numbers. Okay, you take the numbers. What did you pay for it? Okay, what is your profit potential? What's the risk? What's the reward? What are you giving up? What are you getting? All about the numbers. Okay, you have to do the math. Okay, when you buy something, there's an absolute price. Okay, you buy something at, let's say, $104.23. That number never changes. What you pay for it, it never changes. Okay, if you sell a premium against it, that never changes either. Okay, all right. When you sell an option against it, okay, the strike price never changes. The price you collect never changes. Okay, the only thing that actually changes is the stock price, not what you bought it for, but the price itself. Because you're throwing a dart at a moving train while you're sitting on a horse going 50 miles an hour, however you want to put it. Okay, the numbers change constantly. Okay, you hit that button. When you hit that enter button and that confirm button, that's your price. Whether you're selling or whether you're buying, that's your price. That never changes. The math, you just got to figure out what the math is. What are you trying to figure out? What's your rate of return? Well, what did you pay for it? What did you profit? Your profit is you divide the profit by the purchase price. That gives you your profits. Okay, it gives you a percentage. Oops. Let's see if this works. I'm confused. You hold the stock or you day trade them. All right, bill to pay. No. Uh-oh. They're doing work on the servers, so we can't log in until the work is done. All right, bill to pay. What we're doing is we're buying a stock. Okay, number one, never buy a stock you do not plan on holding long term. Whatever long term is for you, whether it's a month, 5 months, 6 months, 10 years, 15 years, 50 years, eternity, it's totally up to you. To me, the longest I've ever held anything, all right, gotta give me a second while I fix this. The longest I ever hit anything was 9 months. Okay? I have no desire to hold on to anything. I got married once. I don't plan on doing it again. I don't want to marry a stock. I want to buy it, take my little tiny bit of a profit, my 1% per week, and say thank you very much and move on. Okay? I have 150 stocks. I would love to buy each and every one, and I will when the numbers work for me. Okay, so when the numbers work, that's when I'll do it. Let's see if it's working now. All right, still not working. QDE pays weekly dividends. What are your thoughts? QDETE, or whatever it is, it's an ETF, electronically traded funds. Okay, market cap traders. I don't ever tell anybody what they do with their money. If that works for you, great, no problem. Why do you disagree? All right, what am I disagreeing on, Joshua? Let me go back up. Joshua, what would you say? You purchase undervalued stocks, aristocrats, and hold. I don't hold, Joshua. I'm not disagreeing with you. I don't hold. Okay? The longest I ever held on to anything was 9 months. That was Kimberly Clark. Kimberly Clark, I held on to for 9 months. I got 3 dividends and about 20 or 30 premiums. Okay, Joshua, I'm not disagreeing with you. I'm just saying I don't hold for a long period of time. Longest I've ever held on to anything was 9 months. I'm confused. Yep, nope. ODT pays weeklies. I'm going to say no, only because it's an electronically traded fund. Electronically traded funds are, whoops. Why? All right, hold on. Wow, I'm missing a lot of these things. What if the contract's losing you money? Well, you're doing it wrong then. Wow. Oh, I'm missing all these questions. I missed all these questions. What state am I? I'm in Massachusetts at the moment. Good test would be HRL. I think it's good, but the premiums are probably shit. Then don't buy it. Yeah, thank you, Al. Al's right. I don't mind holding a stock. I don't want to. I just don't mind. Okay? Now, I want to buy it on Monday. I want to be out of it by Friday. Because next Monday, I have another whole list to look at. Okay, I can buy calls and puts, but not allowed to sell them. Yeah, well, then you're not at the right strategy yet. You can do covered calls. That is the simplest one there. Limit price, no. All right, let's see if it works again. All right, Thinkorswim is under maintenance, so it may work, may not work. Okay, not yet. Okay, more questions. Al's on the scene. Thanks, Al. What if the contract is losing you money? All right. Oh, okay. Oh, there's a specific strategy to it. If I buy it at $100, okay, I buy a stock at $100, right? I sell somebody the right to buy it from me for $100. What happens to that contract after that point, I really honestly, I don't know how to describe it to you. Really don't care. My concern is, number one, it has to be a good quality stock that I do not mind buying. Otherwise, it would not be on my list. It's never a question for me, do I like that stock or don't I? I've already done that work. Okay, if it's on my list, I don't mind owning it. Okay, there's 9,000 stocks to choose from. I only have about 150 on my list. I have no question whatsoever about buying any one of them. The only question I have is, do the numbers work for this stock this week? That's it. Do the numbers work for me this week? Doesn't mean I don't like the stock. That means I will look at it again next quarter. Okay, when the dividend's paying out 4 times a year, I'll take a look at the exact same stocks 4 times a year. They either work, the numbers either work or they don't. If they don't, all right, see you in 90 days. All right, see you in 90 days. All right, see you in 90 days. That's how it is. Strange, my Thinkorswim is working. Well, all right, I'm on Schwab and then TD Ameritrade because Thinkorswim is on Schwab and TD Ameritrade because they haven't transitioned over yet. Ooh, which gives me an idea. Hold on a second. Thanks for that. I might go back and change over to TD Ameritrade because that might be working. You need to be level 3. Level 3 for some. Mine is working too. Okay, why would I take a contract, loses money? All right, targets at least 1%. All right, Joseph Johnson, are you doing realty income this week? EXD. Oh, you're talking about that's a monthly. I don't do monthlies, and there's a reason why I don't do monthlies. Schwab. Try it again. How much do you need to purchase 5 trades a week? DJ, wait a minute. To proceed, updates, close all windows. All right, close automatically, blah, blah, blah. I thought I did, blah, blah, blah. You can start out with any amount. Okay, there's certain types of trades you can do with a small amount. They have fractional shares that you can do with smaller amounts. You don't have to buy 100 shares if you're not doing the contracts. All right, if you only have enough money, let's say you have $500 to start out with, $100 here, $100 there, $100 there, $100 there. Okay, you buy a few, capture the dividend. Once the dividend's done, go on to the next stock. Okay, that's. Oh, someone else is joining me over here on Instagram. Look at this. I'm starting to get more people over on Instagram. Let's see. It's under maintenance there too. I don't know. All right. How much you need to purchase 5 shares? It's all what you do in yours is all different. All right. Google says selling calls are more dangerous than buying calls. Well, I don't know exactly what the question was, but if you ask covered calls, hey, look, we're up on this account. This is a different account than the other one. This account doesn't have all those. Okay, well, hold on a second. Doesn't have all those lists. Look, this account only has 5 lists. That's it. All right, anyway, that's why I use the other account. The other account has all the lists. Okay, so I love M Beach. I love M Beach. Okay, I love M Beach. The question you should be asking is are covered calls a safe trading strategy? Look at this, 3 people over here. And Dunnick, I have no idea. How are you guys doing over there on Instagram? Now, Instagram, you guys, I really honestly got to apologize because I don't know how to interact with you guys yet. I really don't, because all I see is just the names all squatted up there. I see no questions at all. Okay. If option is out of the money at the end of the week, you write another one for the next week. Well, I have to wait for it to expire, or I buy it back and then I write another one. But it comes back to the same question. I mean, same answer. It's all about the numbers. Okay, you're asking me a question without giving me a specific instance. Okay, see, I don't know exactly what I'm going to do until 3:30 on Friday, or 3:30 tomorrow afternoon, because tomorrow options expire tomorrow. Okay, so tomorrow afternoon at 3:30, 3:45, I'll be able to answer that question a lot better, because I'll have a good idea. I'll be able to see the chart, see what its movements are. Okay, is it an upward trend? Is it a downward trend? Okay, what are the options for next week? There's a lot of different questions. To quote John F. Kennedy, I can't answer the questions of tomorrow with the information I have today. Can't do it. So that's why we jump on in our little private trading group every Friday afternoon at 3:30. In this instance, it's Thursday afternoon because the market closed at Thursday tomorrow because there's no trading on Friday. Next question. Oh, I missed a bunch. It was a beautiful day today. Yes, it was. SCHD, SPNY. Yeah, those are all. Yeah. All right. User, whatever. SCHD, ETF. SPYD, ETF. VYM, ETF. I can guarantee with 100% certainty not one of those pays over 40% per year. Okay. If I'm wrong, I'll send you $100 just for being wrong. But I could pretty much damn straight sure. Matter of fact, let's take a look for the fun of it. Go to Yahoo Finance. I love Yahoo Finance. Everything's right at my fingertips. Okay, Yahoo Finance. SCHD. Oh, ETF. Imagine that. Okay, what are my returns for? Oh, look at that. SCHD has a 3.42% yield. What does that mean? That means I'm putting in $78.87 per share. And for that, I'm getting 3.42% for the year. Okay, year-to-date total return, 4.4. Oh my goodness, that's better. Okay, I get 1% per week on average. All right, where is it? Whoops. Okay, last week I made 0.9, the week before 3.9, 3.9% in 1 week, 4.63%. Week 10, week 11 already beat you. 2 weeks, I already beat your whole year return. So please, I don't like ETFs. The returns are crap. My personal opinion. However, if it works for you, more power to you. But I like to take personal responsibility for my own money. It was a beautiful day, yes. Yes, my TOS is TDA. Yeah. Speed 65. Yes, why not? Covered calls are one of the safest strategies out there. Thanks, Winner 86. JPEQ, another ETF. I don't know why you guys don't grab that one. Whatever. Galant. If the stock price significantly exceeds the call strike price, do you have to sell at the strike price? All right, Galant. So you don't have to do anything. Really, honestly, you don't. You always have choices in life. However, when you buy a stock and you sell a covered call against it, you are selling your rights to that stock, which means if you do not want to sell your stocks, you have to buy back that option at whatever that price is at the moment. Can they go up? They go down. If the stock goes up, guess what else is going to go up? The option price. That's the reason why people buy options. They buy options with the anticipation of them going up. If they go up, then that person has control over the shares which you pledged for it. Now, the focus of this strategy is a safe, secure, predictable, consistent 1% per week. What's your open position at the moment? My open position? I have 5 different accounts. So that question is kind of vague. Sorry. All right, thoughts on ICT. I want to study his videos until I open a live account. I have no idea who ICT is. Sorry. But Galant, I hope you understand that. You can do whatever you want for your 1% per week. What is my open position? I have open position right now about 50%. I have 5 different accounts. Okay, 2 accounts have this strategy. The other 3 do not. All right, this is the only strategy I give away for free because it's simple, it's safe, and I want you guys out there to enjoy the profits if you so desire. Okay, this was created for a 9-year-old little girl. It had to be simple, it had to be safe, it had to be predictable, consistent, and no way she could possibly lose. So the rules were: never buy something you do not want to hold long term, never sell at a loss, make sure it has 20 years or more of increased dividends, make sure it has weekly options, and make sure the numbers work before you buy. All right. Galant just will automatically sell at the price. Yep, Galant. All right. Anyway, am I possible to get daily historical top day gainers from the internet? Yes, you can. You just put it into Google, and they'll get it for you. I need to go to Options University. All right, Galant, you need to decide what you want to do. Okay, you and I have had a conversation on the phone. We had a nice conversation. This strategy is basically safe, secure, predictable, 1% per week. If you need more than 1% per week, which is over 50% per year, I have other strategies, but they have more risk to them. Can you simulate a trade on stock right now? I can't get online, dude. Oh, yes, there we are right there. All right, so let's do a simulated trade. Okay, what were we just talking about? Apple? No, we were talking about Albemarle. A-B-L. Albemarle. Uh-oh, A-L-B. A-L-B. All right, Albemarle. Yep. All right. Hey, LA Soundwaves, how's it going out there in California? So we loaded up the truck and we hit the Beverly Hills. That is swimming pools, movie stars. All right, so a covered call. Okay, are you guys watching what's going on here on your own computer at home? All right. I want to go here. I want to click on this, and I want to click on 129 to 130. There we go, right there. And I want to buy just 100 of each. Okay. I want to buy 100 shares, and I want to sell 1 contract. I want to do it at the market order. Okay, and then I want to hit confirm and send. After I do that, it's going to pop up. Buy one covered ALB 100s. That is the weeklies. 5 April 24. That is this Friday coming up. Not this Friday, but next Friday. Okay? The 1:30 call. My profit, okay, on this particular trade, my profit right there, 423. What is it going to cost me? 12,576 for 100 shares. Okay, so clear this. My profit, 423. And I'm going to divide that by what I'm investing. 12,576. 12,576. Gives me a grand total of 3.3%. Okay? There you go. Get out of there. I don't want to do that. And back to here. All right, so it's so simple. Can't wait. Jose, like I said, DM me with your number. I'll give you a buzz. How do you choose your strike? Well, there's a lot of factors coming into it. All right. Now, that's the reason why we have the trading class. Oh, very intriguing. I sell company calls myself. I mainly stay on Apple and hedge with the wheeling strategy. Hey, that's a freaking awesome strategy. It really is. Okay, but do you get 1% per week? All right, how do you choose the strike? Well, like I said, that's the reason why we have that class every day, and that's why we have the one-on-one trading. All right, so that being said, you have to look at the numbers. Okay, do I want it at the money? Do I want the money or out of the money? If you have 100 shares move down and only $5 per share, then you don't take profit at all. Okay, Mike, I'm gonna direct you back to rule number 1, Mike. Never buy something you do not want to hold for a long period of time. Okay, is it going to work every time? No. How often does it work? Well, it works quite often. Okay. We're going to have an end of quarter celebration. Oh, that would be nice. Uh-oh, battery's getting low. Let's switch it up a little bit. Switch over here. Switch up over to here. I got old iPhones. I love old iPhones because the cameras are great. So I'm trying to learn all this new software. All I do is just hit the button. All right. I think this seems more like work than the wheel, but more profit. Okay. Now the wheel does have some perks to it. Okay. It's not as simple as this. Okay. The wheel, you sell the cash secured puts first, which is kind of strange if you think about it, because with cash secured put, you still have to put cash up, and you get a return. Okay. It varies with the premiums. It's around 0.5 to 1% a week in premiums. I am open to hearing yours though. Mine's like, yeah, mine averages between 1% and, well, lately it's between 1% and 3%. Yeah, with the wheel you're doing cash secured puts. Basically the same thing, because you're putting money up on a stock position. Okay, whatever that stock position does, you're collecting a premium. It's basically the same thing. You're just adding another step. Okay, mine I'm eliminating one step, and it was I had to make it simple. Okay, once you throw the wheel in there, once you throw puts in there, once you throw delta in there, once you throw the Vegas, and then once you put the Greeks in there, everything is confusing. Okay, remember, she was 9 years old when I taught her this strategy. Now, I do have a bunch more strategies, but I don't give them away for free. Okay, if 50% a year is not intriguing enough to you, what I have up my sleeve is not going to be intriguing to you also. You know what's funny? Is I have 3 Apple cameras, 1, 2, 3, and my shirt is a different color in each one of them. That's weird. WPM. All right. If the good stock goes down a few days later, puts go way up in price. Usually. Right. Makes sense. Thank you kindly there, sir. All right. What one look? WPM. WPM. Wheaton Precious Metals Corporation. Interesting. The 47. All right. I'm going to say no to that, Joe, right away. Here's why. Purchase price, 47 bucks. Okay. The 47 strike price, 40 cents. That's less than 1%. See how quick and easy that was? I didn't even have to look at the charts. Don't have to look at anything. I just look at the numbers. The numbers in this instance is a no. Now, there's 9,495 more to go. So, it is basically that simple. Do the numbers work or don't they? When can a complete beginner start and doesn't understand the thing you're saying? Well, helping humans. A complete beginner is the easiest person to teach because it's just 5 simple rules. Do you think it's overpriced or at present? WPM? Wait a minute. Oh, wait. Hold on a second. I got to change this. Well, you have your 30-day high right here. Okay? And today is not challenging the 30-day high. You had 4 down days in a row and 1 up day. I like 2 up days bare minimum before I jump into anything. Where can you complete beginner start that doesn't understand the things you're saying? All right, helping humans, best thing I can do for you, DM me with your phone number. I'll give you a buzz, and we can chat. Okay? But first, before that, does what I'm saying make sense? Do you understand the concept? Only qualified companies out of 9,495 companies in the stock market, only about 150 make my list. Okay, it's 20 years or more of increased dividends. Have weekly options available. Most of them are household names. Let me rattle off a few of them for you. Oh, wow. SPGI. Well, we have the Gap, LMT. What the hell is LMT? Bank of America, GPC. Oh my goodness, Genuine Parts, one of my favorites. What are your thoughts on Corning? Ooh, Corning. Believe it or not, DAX. Corning. Corning's been on my list for a while. I'm guessing you go with mainly Dividend Aristocrats and Kings. Yes, but there's a bunch more that I add on that also. But yes, Dividend Kings and Dividend Aristocrats. Awesome. LA Soundwaves, what books? Okay, helping humans. I mean, he wrote, oh yeah, I help. Who are you? Nashapil. Nashapil, how are you doing today? I am that I am. Who said that? I am that I am. All right, anyway. What are we going to look at next? Apple. We're in the middle of looking at Apple when everything went to bed. Can you please look at Hormel? Coming right up, Hormel. HRL. Now, for those who don't know, Hormel is a dividend king. They incorporated back in 1890s. Yeah, oh, Popeye said that, but also God said that to Moses on Mount Sinai. So far, I have Robin Hood and 150. I'm learning the terminology. Way to go. Because while his husband look at the website. Thank you. Great job. I did 90 minutes. Toll Brothers. TOL. Toll Brothers is on my list. But we're looking at Hormel. Okay, so let's chill on the questions for a little bit. Hormel. First thing I want to look at, 35. The 35. All right, Gallant. Sorry about this, dude. Purchase price, 35 bucks. The 35 strike price, 20 cents. Sorry, dude. The premium sucks. Okay, if the premium sucks, why would I want to look at it? Okay, listen. Oh, I'll give you a good one. You ready for this? WBA. Tra-la-la. WBA is Walgreens. Now, for those you don't know, Walgreens is almost every major city in the United States. Look at the price. $21.04. Okay? Yes, we are live on YouTube. $21.04 is the purchase price. The 21 is going for 93 cents. Let's get the calculator out really quick. the calculator. Clear this out of the way. Collecting 98 cents. Okay. Now I'm losing 4 cents right off the top. Z account. Check this out. Right? We're looking at Walgreens. Walgreens, the price to buy Walgreens right now, $21.04. If I'm going to sell it at 21, I'm losing 4 cents, right? So why would I do it? Well, why I'm going to do it is the premium is 94 cents. So I'm profiting 89 cents. Clear that. So my profit is going to be 89 cents. I know 89 cents does not sound like a lot of money, but let's divide it by the purchase price because I'm only paying 21 bucks for it. And that comes to a grand total of 4.2%. So Z accountant, you tell me that is 4% better than what is the premium in WBA? I think the premium, I collected the premium. No, I collected the dividend already. But yeah, the answer is yes. Okay, so if I do that trade, let's do it real quick. All right, let's get out of here. Let's buy covered and 21. There we go. And let's do just 100 shares right there at the market. Okay, and I do this. Okay, buy one covered WBA 100s. Those are the weeklies. 5 April 24. That is this Friday coming up. Not this Friday, but the Friday after, 1 week away. Okay, my profit is going to be $93. Clear this. $93.50. How much am I paying? My friend told me to buy stocks way under a penny, and I will be rich. He's a bit of a dreamer. Well, you could, but there's a lot more to it than that. Okay, so look at this example I'm doing right here. My profit's going to be $93.50. What is it going to cost me for 100 shares? It's going to cost me $2,000. So $2,006. My profit is 4.66%. Okay, 4.6, and that's just for 1 week. Okay, I've had Walgreens for 11 weeks. Okay, I'm averaging 1.7% per week. This week it was 3%. Last week it was 2%. The week before, so on and so forth. Nice. Thanks, Wade. Let's go back. I don't want to do that one. Delete that. Let's go back here. And what do we want to look at next? BP is on the list. James, WBA earnings tomorrow before the opening. But yeah, I couldn't resist the premiums in for 25 contracts. Way to go. I think you got me beat. I think I got like 48 contracts. I still have WBA. So do I, Wade. Okay, I've had it for 11 weeks. I have no problem taking it into next week because the premiums for next week are just as fat. Okay, Apple. We haven't even done Apple yet. Let's get back to Apple. AAPL. Now, I don't have control when the internet goes down because they do a JD. Oh, LA Soundwaves. We did a JD. I mean, LA Soundwaves. We did JD this morning. JD and FFIE. That's a big fat no. All right. FFIE. Now, so let me ask you a question here, Del Bell. Did you double check that FFIE has weekly options and 20 years of increased dividends? No, you didn't. It has monthly options. Big fat no. Okay, that's all I ask. You guys, please. All right, this is a great strategy. I would like to learn more about it. I am an architect in Mass. Hey, I'm right in Marshfield, which is just south of Boston. But always found finance and trading to be a passion. Awesome. Well, come on over to okay, you're over here on Instagram. Okay, now Instagram I'm still new at, so you gotta forgive me. All right, I don't quite know how to do Instagram yet, but if you come over to my website, which is right here, the10minutetrader.com, you slide down right to here, you can join my live trading group. Every morning we trade. Okay, so that being said, maybe we'll see you there. let's jump back. Where was I? Oh, we were looking at Apple. AAPL. All right. Please, guys, when you suggest a stock, all right, Z Accountant, you think monthly may work for some bigger bankrolls? Just curious. All right, Z Accountant, definitely not. Okay, because monthlies give anywhere between 1 and 3%. Okay, 1% is 12. That's 12% per year. 2% is 24% per year. 3%, if you're lucky, that's 36% per year. 1% per week. Okay, 1% per week is over 50% per year. LMT. Where do you have LMT? Where can I get a Delta order flow data from? Wow. Okay, you're definitely in the wrong room asking that question. Not that I don't know the answer. It's just that it has nothing to do with this trading strategy. Wow, nice. Didn't let me distract you on Apple. Yeah, I do. All right, so Apple. Let's get back to Apple. Please don't make me turn off the comments again. Okay? What is your strategy? Buy a good quality dividend stock, capture 1% return per week, say thank you, and go on to the next week. Well, that's pretty simple. Pretty simple strategy. Safe, secure, predictable, consistent, 1% per week. I like that. Safe, secure, predictable, consistent, 1% per week. Okay, do I make 1% every week? No. Do I average 1%? Yes. What time frame are we discussing? 5 days. BUPS, never heard of them. All right, let's get back to Apple. Bottom of the year, 52 weeks ago. 52 weeks ago today, bottom of the year. Okay, that was 155. 155, what is it exactly? 155.89. It's the bottom of the year for Apple, but beautiful escalation from 155 up to almost 200. Look at that. 1, 2, 3 months. That's a nice movement. Bullish put spreads? No. Jim Bowman, have a good night. Catch you next time. Z Accountant, love the elevator pitch for what your strategy is. All right, Z Accountant, it's pretty easy. Okay, so let's look at the last 90 days. Okay, we know what the low of the year is. We know what the high of the year is. 3 months ago, what did this thing do 3 months ago? Because I want to start looking at what the pattern is. Okay, what is the pattern? Once we figure out what the pattern is, then we can see if we can take advantage of it in the upcoming week. UNP, Randall. Randall, did you check and make sure it has 20 years of increased dividends and weekly options? Randall, please. Did you? Okay. Apple. High of the 90-day period, low of the 90-day period. Where was it 90 days ago? Where is it now? What is the movement? Okay. Come down. Look at the gap. The gap down there. Okay. Up, down, up, down, up, down. 2 gaps. 2 gaps here. Up, both gaps filled. Okay. Now we get a nice update today. What's going to happen tomorrow? I got 4K. I need to start. John, DM me with your phone number. Give me a buzz. We'll talk about it. All right, James, we're going to take a look at Kohl's in a little bit. As a matter of fact, Mr. James, Kohl's is next on the list. So hang tight and we'll see what Kohl's look like. Hewlett Packard. That's not on the list. Let's put it on. HPQ. Okay, guys, no more suggestions for a while. Let me get rid of some of these on the list. Do you day trade with options? No, I don't. There's a question, simple answer. No, I don't. All right, so Apple, we know what the high is, we know what the low is, we know what the movement. Okay, we want to take a look at what is the average movement over the last 90 days. Now I want to squeeze in, take a look at the last 30 days. Okay, the last 30 days, look, 30-day high, she dropped down, back up, back down. Look, now she's going the way up. All right, which is kind of good because I got Apple in 4 different positions. Not on this account, on a different account. But I do have Apple. So I got to let you know what I own. All right, so I do have Apple. Now, I love Apple. Wait till you see this. Are you selling calls? Mr. Toll, yes, I am. I bought 50,000 worth of Apple back in '97. Never looked back. Well, lovely. I need a tutorial for that app so I can learn how to. All right, well, like I said, DM me your number, I'll give you a buzz. Looking at stock 20 years of increasing dividends, that provides weekly no, does not provide weekly dividends. Monthly dividends, weekly options. This is why I tell you guys, you got to get the terminology correct, because you can lose a lot of money if you get the terminology correct. And I know that by experience. How much is your minimum startup on capital? Camilla, my grandson started with 50 bucks. Okay, so look at a good stock, capture a dividend, get back out. All right, let's concentrate on Apple. You're going to love this. You ready? We're going to take a look at the seasonality for Apple. Now, the seasonality is how does the stock perform year after year after year. Now, the blue line represents this year here. The red line represents the last, oh, let me see, what do I have this one set for? That's better. I have it set for 10 years. Over the last 10 years, this is what it looked like. Okay, I can change that to the last 5 years. Okay, this is what Apple has done on average over the last 5 years. Okay, we're right here right now, still on to the upside. How much you've been in stock capital? Okay, Camilla, it's different for everyone. Okay, if you're really interested, DM me with your number. I'll give you a buzz. We'll have a chat. If not, you can always join my group in the mornings. Okay, the 10-minute trade. You go right up here to the bio, the 10minutetrader.com. Lots and lots of information there. All right, so I like it set for 10 years. 5 years I don't think is enough information. But anyway, look at the nice movement. Nice, smooth, and steady. And somebody mentioned something. All right, so Randall Ray, you are absolutely 100% correct. And I'm going to agree with you 100%. I never said Apple paid dividends 20 years. Okay, I said I only do stocks that have 20 years of increased dividends, which I do. The only reason we're looking at Apple, it's on Warren Buffett's list. Okay, I cut Warren Buffett some slack because we all know who Warren Buffett is, and we all know that he's a hell of a lot better than most of us in picking good stocks. So if it's good enough for Warren, it's good enough for me. So yeah, every once in a while I will make an exception. Apple, I make an exception because it's on Warren Buffett's list. There's a few stocks I look at because they're on Warren Buffett's list. Okay, my list is what my list is. Okay, so that's that. I love the smooth, steady upward climb for Apple. Okay, so for the next couple of weeks, she's going to go up. So let's get back to where we are. Okay, so here's our 30-day bottom right here. Okay, she went up, pulled back. Now she's going to go back to the upside. All right, so what do the numbers look like? Right now, 172.96. So the closest one is the 173. And it doesn't have a 173, it has a 172.50. And then a 175. Let's move this over. So the 172.50, oh, I'm looking at the wrong one. There we go. The 172.50 is going for 251. Now I'm losing 46 cents right off the top. All right, see the purchase price, 172.96, and if I sell the 172.50s, I'm losing 46 cents. So that means I can take 46 cents off of this, and I'm still over $2. Okay, that is a good. I'm gonna put that one on my list, and I'm gonna circle it. Okay, not that it has a dividend coming up, but because it's over 1%. I'll take a look at it. and Randall Ray, you are right, it doesn't. But I make exceptions for what's on Warren Buffett's list, and I hope you guys understand that. Why wouldn't you sell puts? Mr. Troll, I don't sell puts because it's not part of the strategy. The strategy had to be simple. Okay, simple, safe, predictable, consistent. Once you add another another component to the strategy. It's no longer simple. It was created for a 9-year-old. And yeah, I like selling cash secured puts. How about Coca-Cola? That's a big fat no. My favorite dividend yapper. Thank you for that, I think. I think. Yeah, but Mr. Troll, I don't do cash secured puts. It's just one more thing I have to think about. Hello, I just got here. I am new. OG Ocean. Well, hello and welcome to the crowd. Come on in. The water's fine. It's not too deep either. All right, so that's Apple. I like Apple. I have Apple in 4 different positions in a different trading strategy. That's only available for those in my morning trading group. For those of you new here, I do have a morning trading group. We get together Monday, Tuesday, Wednesday, Thursday. Okay, 9:15 to 10:15. Okay, we do all our trades. Usually all our trades are done on Monday, Tuesday, Wednesday, Thursday. It's usually questions and answers. What do I need to know to catch up? Oh, well, what you need to know is pre-qualified dividend stocks only with 20 years of increased dividends and weekly options available, and then we sell covered calls against them based on when they have their dividend. There you go. In a nutshell, less than 30 seconds. All right, so next one on the list is Kohl's, KSS. And I believe I have some KSS. Not in that one. Yep, I do. I do have some Kohl's. 1,000 shares at 26.73. I sold at 27s and collected 37 cents. Nice. That's a 1.5. Love it. All right. Anyway, let's get back to it. Kohl's. KSS. All right. Oh, now Kohl's already paid their dividend. I already collected the dividend for Kohl's. However, it didn't meet my criteria or my strike price, so I brought Kohl's in from last week. How can I find you on YouTube? The 10-Minute Trader. Okay, THE 10-Minute Trader. Or you can go right up here to the click on my face right there. Punch me in the face right there. That'll bring you to my bio, which will have the 10-Minute Trader hyperlink and go right to there. All right, where were we? Oh, Kohl's. Let's take a look at the numbers. Now, I like it when they pay fat premiums because I'll just keep on buying them. You know, if they continue to give me 1% per week, like Walgreens, I'll hold Walgreens all year long if they continue giving me over 1%. I got no problem with that whatsoever. I don't think Walgreens is going to close up and disappear just because we're having a few issues in some of the cities across the United States because the Democrats don't want to, enforce the laws. Thanks for that, Al. A year ago today, we opened up at 21.66. The top of the year was in the beginning of August, okay, and that was 29.60. The bottom of the year was in the middle of October at 17.68. The very first thing I want to do, okay, the very first thing I want to do is, what is the high of the year? What is the low of the year? Where was it a year ago? Where is it now? All righty. Now, after that, I want to take a look at the last 90 days. That was 3 months. Okay, 3 months. I can do 3 months. The high. Okay, the low. Where was it 90 days ago? Where is it now? Now, personally, I think there's going to be profit taken on that tomorrow. It looks freaking crazy. 90 days ago, we have a double top at 29.45. About a couple of weeks later, we got the bottom, 23.38. From there, she goes up, pulls back, up, pulls back. I love it when you can see the movement. Look at that. Down, up, down, up, down, up, down, up. I love it when you get predictable movements. Big lot stock drops. Looks juicy. Okay, it's not 20 years of increased dividends, so it's not on my list. Sorry. Brad, thanks for sharing that. All right, the last 30 days. Let's look at the last 30 days because that gives me an idea of what's happening. Now, look at the last 30 days. Look how long it took. to go from this all the way down to the bottom. That took 1, 2, 3, 3.5 weeks to get to the bottom, and then a week and a half to get to this top. But look at this top today. That is huge. Okay, she opens up at 26.72 and hits a high at 28.46. I know that doesn't sound like a lot, but for a $20 stock, that's a big move. Okay, hypothetically speaking, you see a bottom from here. Okay, this is the bottom. This is where we are now. Honestly, ask yourself a question. What do you think is going to happen tomorrow? Really, seriously, ask yourself a question. From the bottom here to today, that is a week and a half. I hope coal drops tomorrow on 26 so I can keep my shares and sell the 27s next week. All right, OG, you really think it's going to go up again? Carl, nice to see you. Can I get your opinion on IVR? Long-term hold. Really? Yep. Okay, Craig is the only one who got it, winner 86. Craig, most likely it's going to be profit taking because it ain't a profit until you take it. IVR, are you shitting me? Really? IVR. Why am I looking at IVR? Invesco Mortgage Capital. IVR. 78 bucks. All right. My honest opinion, but IVR, hell no. Here's my reason. Right here, this is live on YouTube. You can see the numbers yourself. Okay, it's only been paying a dividend since 09. 09, it was $6.10. Then it jumped to $10.50. Then it jumped to $7.80, $7.40, $10, $9.70, $10, $9.70, $8, $6.50, $6.50, $6.50, $5, $4.50, $4.50, $4.10, $4.20, $4.50, $5, 20 cents, 50 cents, 90 cents, 65 cents, 40 cents. They're decreasing in dividends. Why the hell would I jump into that? You saw that too, Ray? Dogwood fleas. I like the way you put that. Apple. We just looked at Apple, dude. I'm going to go down, you think. It going down. Oh, we were talking about Apple? Is Apple going to go down? Didn't we just look at Apple? We already looked at Apple. Why are we looking at it again? Okay, the numbers look good for Apple. I actually own a bunch of Apple. Okay, so I honestly don't know. Jaden Ruiz just got here. How's it going? Yes. Oh, most likely profit taking. I don't know about Apple. Okay, if we take a look at Apple, look at this. Okay, big gap down. So that's the market maker taking your profits away if you don't take it. Okay, the bottom is here. Okay, she goes up, pulls back, kind of sideways here. Big update today here. So we have two choices. She goes up and down. And is she going to go up again? We don't know. Okay, I would like to see what it opens up tomorrow morning. Like TMR, I'm saying it's going to go down. All right, I'm heavy in CLRO for the dividend on April 10th. CLRO. Why the hell would I do that one? Has no options available. That's a hell no. Sorry, dude. Okay, next on my list, UPS. Oblaroiden, MPW. I got an option for 175 put. I have no idea what we're talking about. Walgreens is 21 right now. I don't think it has found a bottom. Bigfoot, the bottom was, we don't know where the bottom's going to be. But I have no problem holding on to Walgreens because it's giving me 3% this week, gave me over 2% last week, over 2% the week before. I have no problem whatsoever holding on to it. Do you trade Canadian bank stocks? If it's on the U.S. stock market, yes. If it's not on the U.S. stock market, no. Okay? We're looking at UPS at the moment. 147.30. 147.30. The 148s, 161. Ooh, that's over 1%. You guys want to know how I find them? Okay, you guys heard of UPS, right? You've heard of UPS. Get the last trade, 147.33, 146.18, 147.30. Uh-oh. What does that mean? Let's take a look at the chart. Okay, a year ago today, we were opened up at 187.39. All right, Jaden Ruiz, I'm not going to argue with you, because I don't believe in arguing with people. I have Apple, and we'll see what happens. All right, we're looking at UPS at the moment, so Apple's done and over with. UPS, 186.87 a year ago. How do I short a stock on Robinhood? Well, you have to be approved for it. You can't just short it if you don't have the approval. And then you just sell, and you have to put money up against it. They don't just let you sell. You have to put a big fat chunk of money up against it. And if you're wrong, you lose. I don't do those because they have more risk. Keys, 10 years, great up. All right, let's take a look at Key. K-E-Y. All right, we're at 11 o'clock. We got a half hour left to go. I don't think I'm going to be able to get to Key. Sorry, dude. Sorry, Tim. Okay, if people keep asking questions. We're on UPS at the moment. Now, a year ago, like I said, 86.60. The high of the year, 198.07. Okay, tally, I'm not going to be able to get to it. New dividend trader, Reed. You got to show up a little bit earlier. Okay, because I'm on at 9 and it's 11 o'clock. Okay, that's 2 hours. I've been sitting here for 2 hours talking and nobody's talking back to me. Kind of strange. Okay, so the high of the year, 198.07. She drops down to the bottom of the year, late October, 133. So she goes from almost $200 down to 133. Ouch. Ouch. What about NVAX? Johnny, I'm not going to have time to take a look at that one to be 100% on. To be 100% honest with you, I'm not going to be able to get to it. Can we just discuss UPS? We're looking at UPS now. Yeah, I know. See, people keep throwing questions at me, and I have ADD. So if a question pops up, if I see it move, I got to look at it. Sorry. All right, so the bottom was late October. Now, the last 90 days, because I want to see the last 3 months. Last 3 months would be December 27th, and December 27th, it was opened up at 155.90. So 155.90, a couple of weeks later, we have a double top for the 90-day period. Okay, 90-day period top was 161. Now, do you see this big, huge gap here? What do you think that is? Okay, she gaps down real big. Let's go back just a little bit. All right, now, you're going to hear me say a few things over and over and over again. Okay, if you have a profit and you don't take it, what do you think's going to happen? Look at this profit from here. Okay, it shoots up nicely, goes sideways for a bit, and if you didn't take your profit here, the market maker took it away from you right there. That big, huge gap down. You have no way to get this profit back because he just gapped it down right there. If you don't take your profit when it's there, you're going to lose it because it ain't a profit until you take it. Okay? It ain't a profit until you take it, and nobody ever went broke taking profits. Granted, that's not my saying, but it's not a profit until you take it. That's my saying. Okay, so where were we? Last 90 days. Okay, you don't take your profit, market maker's going to take it away from you. So our 90-day top was 161.48. The 90-day bottom, 139.80. Okay, from the 90-day bottom to the next high, that's a nice escalation. And again, look at that. You don't take your profit, market maker takes it away from you. See that? Boom. So, last 30 days, right? There we go. 30 days ago today, okay? 30 days ago today, AA is gapping down right now. Okay. Hey, mate, I found your website and it needs a revamp. You're right, it does. Major League. Couldn't find much stuff on it. Bit outdated. Yeah, John, it's Joshua. It is way outdated. Dreadnought looks at lines on the chart and only the chart, like nothing else matters. Okay. Who is the market maker you're referring to? Oh, well, the market maker. Where are we? 30 days ago? Here's where we are. 30-day. Here's your 30-day high. Here's your 30-day bottom. Alrighty. Do you have a book you wrote on your YouTube channel? I have 12 books, Joshua. All right. So 30 days ago, we opened up at 147.50. We topped out at 158.91. That was the 13th of March. From there, a little bit of profit taking, back up again, challenging that 30-day high. 30-day high, 158.95. Not quite the 158.91. So you have two tops right here. 158.91 on the 13th, 158.95 on the 22nd. All right. Now from there, look what happened. Okay, what happened yesterday? Look at that big, huge drop. Why was that? What happened to make it drop like that? Okay, I have a school stock game. What's a stock that is going to skyrocket and win me the game? Good for you. I don't know. Look at that huge drop. You gotta ask yourself a question. Why did that happen? Okay, today was an up day. Is tomorrow going to be up day? I don't know. Look at the 30-day bottom before, way over here. Look where we are now. It has upside potential. Okay, so what is the numbers? 147.33. Now, here's an interesting thing that some of you guys may or may not know. Right? The last trade, 147.33. Okay, 147.33 was the last trade today. Right? The bid, 146.18. The ask, 147.30. So what do you think is going to happen tomorrow? Okay, the market maker is pushing it down. Both the bid and the ask. Okay, the bid and the ask are both lower than the last traded price. The market maker is pushing it down for some strange reason. What does he know that we don't? And I don't like to jump into the stock until I see two up days in a row. Okay, one huge down day, that was Tuesday. Okay, just to let you guys know, wife's coming up for her cigarette break, so after her cigarette is done, time to wrap it up because we're right around 11-ish. Yeah, that's my indicator. You guys want to know my indicator that rotates around my life? There it is, right there. Say hi, honey.
Hi, honey.
Okay. All in on that one. What stock is that? All right, we're looking at UPS. Okay, for me personally, I don't like it. I don't like this big, huge drop. What do you think of this big, huge drop, honey? From 157 down to 142, 143.
I wouldn't go for that.
I wouldn't either, because something's up for that. Something had the reason for that drop. And the market maker is opening it up less tomorrow.
I want to be the market maker.
No, you don't. They have a lot of stress on their life, and it costs a lot of money.
Yeah, but they get no longer.
Yes, they do. Last I knew, it would cost $350,000 just to apply to be a market maker.
How's Jen doing?
I don't know. Jen, are you here tonight? Kathy says hi, if you're here, Jen. Is that Thinkorswim? Yep, Papita, that is Thinkorswim. I think Charles Schwab bought Thinkorswim. Does anybody know if Jen's here tonight? Kathy says hi. Are you a market maker? No, I have no desire to be a market maker. I don't think Jen's here. Yeah, I don't think Jen's here tonight because she usually answers right away. I didn't see her this morning either. Yeah, we'll text her later. Oh, she was earlier? All right, thanks. All right, so for me personally, UPS is a no. All right, now the reason why because you have your last trade 47.33, the bid 147 and 146.18, 147.30. They are both lower than the last price. So the market maker is going to push it down again. So you have one huge down day in a row, one day, and then one up day today. That's what you call a dead cat bounce. Okay? Now, it's a disturbing phrase. Dead cats do. If you drop a cat from a 3-story building, it bounces when it hits the ground. They call it a dead cat bounce. And that is dropping off the side of a cliff. Drop it off the side of the cliff, it's going to bounce. That's exactly what happened. Yeah. For me, UPS is a no. Next on the list, Ford. And I do have some Ford. Good day. We're going back up to 150 on UPS. Yeah, probably. But I don't see it happening tomorrow. Okay. This number right here, the last trade at 4 o'clock this afternoon. This was the last trade. Okay. First thing tomorrow morning, the market maker is opening up lower than what the last trade was. Okay. So he's opening up lower than what the last trade ended. Okay. That's an indicator right there. Okay. You have one huge down day. Huge. That's a huge down day. Okay. Okay, so for me, that tells me next, because I have 150 stocks to look at. If that makes me uncomfortable, why would I want to do it? Remember rule number 1, never buy something you don't want to hold for a long period of time. Don't get me wrong, I like UPS, but not today. I'll check it at 3 a.m. All right, next on the list is Ford. Ford. Now, I do have some Ford, just in case you guys are kind of curious. And the last trade for Ford was 1306. Ooh, okay. We will have big transport issue. Stock is telegraphing this. Okay. Okay, UPS is not the only shipping company out there. All right, you have to take a look at the numbers. Okay, UPS drivers are demanding more money. FedEx drivers are demanding more money. Amazon drivers are not demanding more money. So, who are you going to have? UPS, U.S. Postal Service, FedEx, or Amazon? Amazon is the cheapest way to ship stuff nowadays. PM, Philip Morris on Altria, great dividends. Yes, but when do they pay the dividends and what do the numbers look like?
All about the numbers.
Yep. Are you buying stocks or options? I buy stocks, I sell options. Okay? Covered calls. Buy a stock, I sell the option against it. I collect a safe, secure, predictable, consistent 1% per week. I am perfectly happy with 1% per week. If UPS goes through the roof tomorrow, I really don't care. Honestly, and I don't know how to express it to people. I don't really care. The only thing I care about are the numbers, the trends, and the consistency of the increased dividends. And am I going to get 1% this week? Safe and predictable. Okay, that's all I really care about. Okay, it's not on my list unless it has 20 years of increased dividends. If it has 20 years of increased dividends, Doge. Okay, you're in the wrong group there, buddy. Sorry. 20 years increased dividends, weekly options available, 150 stocks. I have more than enough time in my day to do 150 stocks because I only look at 5 to 10 stocks a week. That's it. You funny AF. Thanks for that, J Rule. Doge 2. Nope. No to that one also. If I didn't do Doge 1, I'm not going to do Doge 2. Sorry. All right. So let's take a look at Ford because I actually do own some Ford. Ford is one of those companies I let a little bit of leeway to because, number 1, they're cheap. Number 2, they're below the book value. And 3, they've been in business for over 100 years. They've seen a lot of shit. World War I, World War II, Korea, Vietnam, Afghanistan, Iraq, Kuwait, stock market crash in 19, the Great Depression, the oil embargo in the 70s, the whole bunch of shit we've seen. Yeah, and they're still in business. Heavily company invested. UPS is good around Christmas. Yeah, probably is. World War III, yeah, it's coming. Bro knows history. Yay! Butter Biscuit. Gotta love that name. So, my humble opinion, okay? This is just my humble opinion. If a company's been in business for over 100 years, okay? Okay, 1.5% for you, Mike, on F. Way to go. Still in business thanks to the government bailout. No, Randall Ray. Ford is the only company that didn't take government money. Okay, if you're going to be quoting history, be saying shit like that, okay, do your research. Ford is the only company that did not take government money. Yep. All right, anyway, so let's take a look at Ford. A year ago, we were at 1154. We have a triple top at 1542, and that was in the end of May. Okay, now our bottom, we have a quadruple bottom at 969. Ford Motor Company, 100-year-old company. The book value is 1444 or 1448, somewhere in that area. 1478, somewhere in that area. Okay, the book value is way higher than the stock price. All right. Currently, let's look at the last 90 days. Did you have a problem for people that don't have a large account to build an account? Carl, I don't have a problem with that at all. I mean, I had to start out, I think I started out with, I think it was like $1,200, but that was like 20 some odd years ago. Are dividends mostly long-term play? No. Beef honey. That's interesting. That's an interesting name. Beef honey. All right, so 90 days ago, that's 30 days. Do you a program? All right, Kyle, I didn't quite understand that. The funny thing is with new technology, sometimes it always doesn't get the question that you really intend to say. All right, so 90 days ago, Ford was at 1237. I opened up at 1238. Okay, it bottomed out. The bottom of the 90-day period. My number one stock right now would be Walgreens. The bottom of the 90-day period was 1082. That was on January 19th. Okay, I like the movement. Look, down, up, down, up, down, up. This right here, I'm not quite sure what this is. Okay, because yesterday was a big day. Today was a big day. Okay, now I already own it, so that's not a big deal. I have no idea what I'm going to do with it. But it's in the money at the moment, so I'll go back to cash and take a look at something else on Monday. Okay. I have been doing drips since 1998 and buy $100 a month of 10 different companies. All right, great. Are you doing at least 30% per year with that strategy? Go. You have a program. Or do I have a program for people that don't have a lot of accounts? Start. Carl, I absolutely do. Okay. Yeah. Carl, drop me a DM with your number. I'll give you a buzz. If not, you can go right to my Patreon page, which up here in the bio. Go there, and that will take you to the website right here. Okay, that will bring you over to my social media, and my Patreon is right there. Okay, and those dots, and my live trading is right here. And that'll take you over to my Patreon page. Look at that, Dividend Stock Talk. Wow. All right, so back to where we were. Let's finish up with Ford. Let's look at the last 30 days. I like when you can see the movements. Okay, this has a pattern. Down, up, down, up, down, up. Just go with the flow. Whatever the flow is, just go with it. That's the 90-day flow. I want to take a look at the 30-day flow to get a kind of idea. Best monthly dividend. I don't have one of those, Beef Honey. Thanks, Al. I can always count on you, Al, to be on the ball. Okay, you, Jen, G. Niles, Draft, bunch of you guys out there. What is DRIPS, Dividend Reinvestment Plan? Only 119 followers go. Cool beans. All righty. Thoughts on Microsoft? I love Microsoft. I do. I don't like the originator, Bill Gates, on an ass. My personal opinion. How long have you been trading? Over 20 years. Okay, so we're looking at Ford at the moment. Now, I don't like the big, huge movement today and the big, huge movement yesterday. Okay? Now, let's take a look at the historical performance. And that we use the seasonality chart. How does a stock normally move? Well, look at it. It's kind of all over the place. Okay? It's not like Apple at all. Apple is a straight, steady move. This thing all over the place. All right, but what is it doing for the past couple of days? Remember Paragon Park? Yes, I do remember Paragon Park. Canopy Lake Park. I remember that one. Basically, look at this. It's going to go sideways. Well, yeah, sideways with a tiny bit dip to the downside. How much could a newbie make with your assistance? Approximately, of course, roughly 1% per week. I grew up in Hull. Cool beans. That's right down the street from Cohasset, Hummerock, and Marshfield. What do you think about FBBYX? No. And just to let you know, when we're done with Ford down for the night, because, oh, wow, 225 people here. Well, you guys come on back tomorrow night. We're going to do the same thing all over again. For those of you who want to join in the mornings, 9:15 every morning, Monday, Tuesday, Wednesday, Thursday. Except for this Thursday, because this Thursday is going to be 3:30. 3:30 is just before the market closes, because we get our positions on Monday, okay, Tuesday, Wednesday, Thursday, questions and answers, and many questions as you got. NCYB, yep, I have New York City Bank. Yep, I have that in my New York Community Bank. Yeah, that's the one. So yeah, if you guys want to join the what do you call it? The monthly, the week, the daily trading. Okay, if you want to do the easy trade for just starting out, simple, that's there. Dividend Stock Talk on Patreon, or you can go to, oh, there we go, the10minutetrader.com. Has a lot of information there. And yes, I know it does need to be updated. It is a little on the old side. I'm old. I don't know how to do all this kind of stuff, but I'm working on it. Ford is a car company. Yes, it is. Give me a cliff note on Ford. Oh, where were we? Oh, we're just finishing up with Ford. Okay, so anyway, yeah, I do personally have Ford. Okay, I have Ford at $12.90. Okay, so if Ford stays above, where the heck am I, Ford? $12.90, I sold at $12.82. So as long as above $12.82 by tomorrow afternoon, I'll be back into cash on Monday. Okay, so what does the premium look like for those who want to buy it? I personally wouldn't be getting it now, because look where it is. It's up at a high. Most likely there's going to be profit taking. That's my long term. Okay, long term for me is 9 months. That's the longest I've ever held. I've been investing for 20 years. Longest I've ever held anything, 9 months. James, I wish you would say the end of the session, which ones are circled on the evening. Well, Sophia, that's why I want to have you come back again tomorrow. Ford has a trend from 12 to 13 right now, but 12 to 13. What time? Central time tomorrow. I'm in Houston, Texas. Well, great. All right. Welcome from Texas. Okay. Got NVIDIA. Cool beans. All right, gaming. Just is for the fun of it. You ready? NVDA. Okay, now NVIDIA. All right, NVIDIA a year ago was at 250. Okay, 250 a year ago. Look where it is now. So what does that look like to you? For anybody over the age of 40 or 50, what does that look like? That looks exactly like the stock. Wait a minute. The gold rush of the 1980s. Does anybody remember the gold rush of the 1980s? Okay, where gold was at $250. It was at $250 and it ran all the way up to $800. It was almost the exact same. Okay, $250 gold back in the 70s. No, 1970s. 1978, 1979 to be exact. Okay, 1979, gold was $250 an ounce. By the beginning of 1980, it was at $850, I believe. Okay, exact same chart. Now, for the people who bought at the high, it took them 3 decades, 30 years to break even. Okay, Nvidia, 250 bucks. Now it's at 902. Okay, do you honestly think it's going to keep going up? It could, but this right here, from 250 all the way up to here, that's all potential profit taking for whoever bought here. Okay, whoever bought here, this is all profit taking. Eventually, this baby's going to come down, because you can't tell someone who bought it at 250, now it's at 900, hey, it might keep going up. But what if it doesn't? All right, so wife is back after her cigarette break. That means it's time for me to call it a night. You guys, it's been great. Again, tomorrow night, same exact thing. For those of you who are going to join me tomorrow at 3:30, I'll see you at 3:30 tomorrow for our balancing out our accounts, see how much we made for the week, and see what our plans are for next week. Guys, have a great night, and I'll see you again tomorrow. I gotta turn off all the same time. Okay, and I gotta keep shutting that. I keep forgetting to turn this one off. 14.